Hi there. You know, one of the biggest reasons I think why many traders fail in this business is that they don't have or don't even know what a trading strategy is. Now, they come into trading blinded by how much money they can make for doing very little work. You know, they trade the excitement factor. Now, you only have to look at the sporting events on television on a Saturday. Every commercial break is littered with those adverts on how to gamble on the next goal or whatever it is. The ad boards that surround the pitch is full of marketing for the gambling websites, and obviously the teams all have the sponsorships with the gambling sites on there as well. I'm sure they pay quite a lot of money for that as well. And why do they do that? Well, because they know that there's a huge demand, and they also know that most people that gamble end up failing. And they also know that human psychology, basically means people get a huge kick, adrenaline boost, when they are gambling to make this free money. And unfortunately, this has spun over, I think, into the Forex market over the last few years or so. It has the same appeal. But if you want to give yourself at least half a chance in succeeding in this business, you've got to do things differently. First off, you need to treat it seriously, otherwise it will eat you alive. Now, the first thing you need to do, of course, is have the realistic expectations. But once you've got that, you need to have a strategy. A, to stop you trading just for the sake of it, for that adrenaline rush, and B, to give yourself an edge in the market. So what exactly is a trading strategy? That's what today's lesson is all about. So what is a trading strategy? Well, basically, it's a set of rules that define your entry and your exits. If this does this, then I will do that. It's basically taking out all the ambiguity. Following rules will tell you when to enter and when to exit. So it's a defined set of trading rules. Now, I reckon every trader should have at least one strategy in their tool bag. When you're starting off in trading, I would say minimize it to a maximum of two. If you can't master one particular strategy and have an edge with one strategy, then you're certainly not going to be able to master it with multiple strategies. So certainly when you're starting off, stick to one strategy and try and master it. Possibly have two in your tool bag as well. But as an absolute must, as a trader, you must have a strategy. Every serious trader has one, and you have to follow those rules religiously. No point just having a strategy there that you think you've got some rules, but you don't follow it. You've got to follow it religiously. Risk management. The strategy has to have risk management in there. What do I mean by that? Well, basically, how much money you're risking on the trade. So some strategies may be high frequency, you might be risking less. Some strategies you might be risking more per trade. So you've got to have a defined set of risk management criteria. X% per trade. And that will include obviously your stop losses and your take profit targets as well. More about that in a moment. The strategy must be written down. None of this, yeah, I got my strategy in my head, yeah, it's up there, it's up there. That won't wash, that won't work. You'll be deviating from your strategy before you know it. You've got to have the strategy written down. I actually have my strategies written down, laminated on my desk, so I know exactly what the rules of engagement are. Strategy must be written down. The trading strategy must be back tested prior to forward testing. This is crucial. Strategies must be back tested. If you don't back test the strategy, you don't know if the strategy works. You don't know how the strategy performs. So the strategy must be back tested before you start trading this with live money. A trading strategy must have a degree of judgment, or can have a degree of judgment in there as well. So certainly there are conditions where you might want to say, well, I'm not trading a strategy today. It could be, say, an election coming up, or something that's expected to come out in the news over the next hour or so, or a big sort of economic event or a national disaster or something like that. So you must have a degree of flexibility, but the core principles of the strategy must apply. Now, the other thing I want to say here is this strategy can be your own. You can develop your own strategy, simple set of trading rules that work, or you can use a third party's. Now, we've got plenty of videos, lessons on the strategies that I trade. You might be able to find them out there in the Forex world of other educators. So the strategy doesn't have to be your own. You can use a third party, but you've got to make the strategy your own. It's got to be basically your strategy. And I'm not just talking about putting in extra criteria, but you've got to know the strategy. And you basically get that from back testing. Again, more about that in that lesson. But the strategy can be your own, or you can purchase or borrow or cannibalize a third-party strategy as well. What to include in a strategy? So first up, a strategy name and description. It's important that you identify the strategy name so it basically has some identification. It might be the sniper strategy, or the trend propulsion strategy, or the counter trend naked strategy. It's got to have a name so that you can identify it, so it becomes an actual real tangible thing that you are trading. So it's good to have a name of the strategy. It could be a breakout strategy as well. Then the trading entities. Basically, some strategies work with some trading entities, some are better with others. So for example, you may have strategies that are only looking at the major currency pairs, the euro against the pound against the dollar. You may have indices like the DAX or the S&P 500. So make sure in your strategy, the strategy lists out the currencies or the trading entities that you're going to be trading with that strategy. And of course, you have done your back testing on those as well. The times of the day that you will be executing the strategy might be a European trading session, it might be the US trading session, it might be the Asian trading session. Make sure the strategy does list the times of the day that you're going to be trading. Last thing you want to be doing is trading a breakout strategy in periods of the day when markets are very trading in consolidation and not really moving very much. So make sure you list the times of the day that you're going to be trading. The confirmation, the anchor chart I call it, basically the higher time frame chart, for example. We always like to use top-down analysis. That's basically looking at the higher time frame. Make sure that's listed in the strategy. So you might say the 4-hour confirmation, the trend is up, but I'm only taking trends that are showing up on the lower time frame charts as well. So it's very important that you list the higher time frame anchor chart in the strategy as well. Technical analysis used. So you may be looking at a MACD, you may be looking at the RSIs or the moving averages. If that's the strategy, if there's a rule there that you're looking to follow, an RSI, overbought, oversold, if that's your thing, then of course that should be listed there in the strategy. Okay, and price patterns, you may be looking at certain candlestick patterns, whether they're pin bars, hammers, dojis, or whatever they are. But again, these price patterns and the technical indicators should be listed there in the strategy. The fundamental checks, you want to make sure, if indeed you're trading the technicals, that you're not going to be trading straight into a big barrage of news or a big high risk event, just coming up to a big non-farm payroll event. Do you want to be trading on a 5-minute chart when basically anything can happen? So make sure that you are looking at the news. If that's the thing, put it there in the strategy. I will not trade this 15 minutes before a high risk event. Rules of entry, basically, as I've said before, if this does this, then I will do that. You've got to make sure that everything is defined, taking all the ambiguity out of your trading. It's ambiguity that leads to all the other problems associated with trading, with indecisions and emotions and so forth. And of course, the risk management, basically where you're going to place your stops. The maximum risk that you're going to risk on that individual trade, be it 0.25%, 0.5%. How are you going to place your stops? Are you going to place your stops below a swing low or a swing high? Are you going to place your stops below a certain moving average or some price action? And of course, your exit rules. Are you going to exit the trade in just one part, or are you going to stagger your exits as well? Everything in the strategy has to be defined. So again, all the emotions are taken out of trading. That's just a sample of things to include in the strategy. And of course, as you get more experience, you'll develop your own strategy, find others, and you'll see all these. Some will be relevant, maybe some will not be relevant. I also think it's very important when you're trading a strategy that you have a checklist. Okay, a checklist is so important. A checklist basically means you check off all the criteria that you've got in your strategy, and you don't trade that strategy until the checklist has been checked off. This will relieve all the stress of the decision-making process. Shall I trade it? Shall I buy it? Shall I sell it? Where shall I take my stop? Where shall I place my profit targets? If you've got the checklist, everything conforms with the strategy, you check it off, all the indecision is taken away from you. It is very, very important. This is a sample of a checklist. This is not a strategy I suggest you go away and trade, although it is a strategy that is in my tool bag, but It's basically just a checklist where I have this laminated on my desk. I don't have my pretty face up there, but I have this laminated on my desk, and I check off as I go all the rules of engagement to make sure that I'm sticking to that strategy. So that's basically it. So now you know what a strategy is. People say, what's a trading strategy? Now you know exactly what a trading strategy is. As I say, we've got plenty of strategies here that we teach, plenty of strategies that we talk about in our live streams, plenty of strategies that you may find elsewhere as well. But now you know what it is. It's a defined set of rules to relieve all the emotions of trading. Hi there folks, hopefully you enjoyed that video, hopefully you learned something there as well. Now don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like if indeed you liked it, give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.